Welcome to Quick Invest Brief. In today's Quick Invest Brief, we're diving into the ultimate investment showdown, Bitcoin versus property. For decades, the house was king, a symbol of stability, wealth, and the perfect long-term investment. But then came Bitcoin, the digital disruptor, promising unprecedented returns and a new paradigm of wealth. So, which one is truly the better investment for you? Would Bitcoin really outperform property prices? Is it too late to jump in? We're breaking down both sides to give you the powerful insights briefly told that will help you navigate this modern dilemma. Let's get started. Before we compare their performance, let's briefly grasp their fundamental differences. Property. This is a tangible asset. You can touch it, live in it, rent it out. It's tied to a physical location, subject to local market dynamics, interest rates, government policies, and supply and demand in that specific area. It offers a sense of stability and often acts as a forced savings mechanism through mortgage payments. Bitcoin. This is a digital asset, a cryptocurrency built on a decentralized blockchain. It's global, borderless, and its supply is programmatically scarce. Only 21 million Bitcoin will ever exist. Its value is driven by network adoption, technological development, market sentiment, and its perceived role as digital gold or an inflation hedge. It's often highly volatile. These fundamental differences lead to very different investment characteristics. Round 1. Returns, the historical showdown. Let's look at historical returns. Over the past decade or so, Bitcoin has undeniably delivered astronomical returns that dwarf property appreciation. We're talking about percentage gains in the thousands, even tens of thousands in some periods. Early investors who bought Bitcoin for pennies or dollars have seen life-changing wealth. Property, on the other hand, typically offers more modest, steady appreciation. In many countries, average house prices have seen healthy growth over decades, but nothing on the scale of Bitcoin's explosive movements. Property is known for its slow and steady climb, but here's the critical nuance. Bitcoin's incredible gains have historically come with extreme volatility. Its price can surge or crash by 20%, 30%, even 50% or more in a matter of weeks or months. Property, while not immune to downturns, generally moves much slower and is less prone to sudden, drastic price swings. So, while Bitcoin has outperformed in terms of raw percentage gains, it demands a much higher tolerance for risk and volatility. Round 2. Liquidity and costs. This is where the two diverge significantly. Property, illiquid. Selling a house takes time, weeks or months, and involves significant paperwork, legal processes, and finding a buyer. You can't just sell a piece of your house quickly. High transaction costs. Buying and selling involves substantial fees, estate agent commissions, often 1-3% plus, legal fees, stamp duty, mortgage arrangement fees, surveys, and moving costs. These can easily eat into your profits, especially if you move frequently. Ongoing costs. As we discussed in our last video, houses come with continuous expenses: property taxes, insurance, maintenance, repairs, and interest payments on a mortgage. These eat into your effective returns. Bitcoin, highly liquid. Bitcoin can be bought or sold 24/7 on global exchanges with relative ease and speed. You can sell small fractions of a Bitcoin. Low transaction costs. Fees for buying or selling Bitcoin on exchanges are generally a small percentage, far lower than property transaction costs. Minimal ongoing costs. Once you own Bitcoin, the holding costs are negligible, maybe a small wallet fee or network fee if you move it. There are no property taxes or maintenance bills. For those who value flexibility, ease of access to capital, and minimal upkeep, Bitcoin has a clear advantage here. Round 3. The intangibles, institutions, and future outlook. This is where the investment debate gets really interesting and personal, especially with recent developments. Property, security, and stability. For many, a home provides unparalleled psychological security. It's a physical roof over your head, a place to raise a family, a sense of belonging. Forced savings, mortgage payments, while a recurring expense, act as a disciplined, almost involuntary way to build equity over time. This is a massive benefit for those who struggle with discretionary saving. Leverage. With a mortgage, you're controlling a much larger asset with a relatively small down payment, amplifying potential gains. Tangible asset. It's something real you can see, touch, and improve. Will property prices go up all the time? Historically, property has shown long-term appreciation, but it's subject to economic cycles, interest rate changes, and local supply-demand. It's not a guaranteed linear ascent, but a generally upward trend over many decades. Bitcoin, decentralization and freedom. For some, Bitcoin represents freedom from traditional financial systems, central banks, and government control. It offers global portability. Digital scarcity. The hard-capped supply of 21 million coins is a strong narrative for long-term value, especially as fiat currencies continue to be printed. The institutional shift. This is a game changer. In recent years, countries and major financial institutions have started to stack up on Bitcoin. The approval of spot Bitcoin ETFs in major markets, for example, has opened the floodgates for massive institutional capital. These aren't short-term traders, they are often long-term holders looking to diversify portfolios and hedge against inflation. Their growing involvement is bringing more legitimacy, liquidity, and potentially reducing Bitcoin's extreme volatility over time as more large, stable players enter the market. Is it too late to invest? While Bitcoin has already seen massive growth, many analysts believe its journey to mainstream adoption and higher valuations is far from over, especially with this increasing institutional demand. Some foresee significant continued growth in coming years, but its future is still less certain than property's long-term existence. However, the presence of these large long-term holders might mean that future price movements, while still volatile, could be less extreme than in previous cycles. It might not go up at the exact same exponential level as it did from pennies, but the underlying fundamentals and institutional backing suggest continued growth. No income. Unlike a rental property, Bitcoin doesn't directly generate passive income unless you engage in staking or lending, which carry their own risks. The verdict? Not a simple answer. It's about you. So, which is the better investment? There's no single better answer, only the better investment for your specific situation. If you prioritize stability, tangible assets, potential forced savings, and a place to live that you own, property can be an excellent choice. It generally offers slower, less volatile growth, but with significant leverage and psychological benefits. For older generations, the buy and settle mentality was rooted in a desire for long-term security and a tangible legacy. If you prioritize potentially higher returns, liquidity, decentralization, and are comfortable with a still elevated but potentially moderating level of volatility, Bitcoin and cryptocurrencies might appeal more. It represents a new frontier with immense upside potential. The increasing presence of institutional long-term holders is a significant factor in its maturation. The smart approach often involves both. A diversified portfolio can include both property, perhaps your primary residence for stability and forced savings, or a rental property for income, and a smaller, carefully considered allocation to Bitcoin or other cryptocurrencies for growth potential and diversification. Ultimately, your investment strategy should align with your risk tolerance, time horizon, and personal goals. Understand the nature of each asset, weigh the pros and cons, and make the choice that brings you closer to your financial freedom. Whether your path leads you to brick and mortar or to the digital frontier of Bitcoin, the most powerful insights come from understanding the unique characteristics of each and how they fit into your overall financial picture. Don't miss our next brief. Subscribe now to get more powerful insights, briefly told, delivered straight to your feed. Have questions or want to share your view? Leave a comment below.